Welcome back. You're still tuned into Trading Hour on CNBC TV 18. For the markets, the mid-caps, they have improved substantially from the lows. The recovery is something that is leading to a 75-point gain on the mid-caps right now. It is closer to the day's high. Bank Nifty too has recovered. So it's a 45-point gain that we're seeing on the Bank Nifty as well. Pull up a Godrej Properties because that stock is in focus. The company just reported to the exchanges a while back that they will be raising 6,000 crore rupees. That's the kind of fundraise they are planning, and it could be via any mode. It could be equities, debt, and other segments as well. So we'll watch out for more details on this one. Company has been on an expansion spree, and they have spoken about needing a bigger chest to do that expansion as well. In terms of sectors, we have the Nifty IT, which is doing very well. The small cap space is continuing to do well. So the mid caps are catching up to that. And we have stocks like Kotak Mahindra Bank at the day's high. There's M&M, SBI, some of these IT names like HCL Tech and Wipro also, which are leading to the gains that we are seeing on the Nifty or the recovery that we are seeing on the Nifty currently from the lows. So it's a good time to get a fundamental check on the markets as well. Madan Gopal Ramu from Sundaram Alternate Assets joins us now to discuss market fundamentals and top sectoral bets as well. Mr. Ramu, good morning. Thank you so much for joining in. You say in your note that earnings is the biggest risk that the markets are looking at right now. Give us a sense of what are the earnings that you're expecting in FY25. Quarter one was weak, of course. We saw low single-digit growth in earnings across most of the sectors. What is the number for FY25?
Hi. I think we began the year with an expectation that the large caps will deliver a 15-16% sort of an earnings growth. Midway into it, we always believe that is going to be difficult. And in looking at what is happening in the major sectors in the Nifty, 10 to 12% growth looked possible. But end of Q1, we feel that there will be further compression in earnings growth. Probably in high single digit is where I think the Nifty is likely to end. We've also see a similar impact happening in mid and small cap. While the absolute growth might be higher than large caps, but compared to the expectations, even mid and small cap space are likely to disappoint. So this overall likely to put pressure on the valuation in certain segments of the market. And that's the view that we currently have on the earnings.
Hi, morning. This is Reema here. Wanted to get your thoughts on these wealth managers, brokers. Now they've had a phenomenal run. Stocks have doubled, tripled. But now the expectation is that, SEBI tightening the F&O regulations is coming. It could come very soon is what we've learned from our sources. And according to, so many notes that it could hurt earnings by 20, 25, 30%. Where do you stand on this entire, wealth management, brokerage kind of businesses? Do you think it's time to book profits?
I think the regulation-related impact is already priced in these stocks, in most of them. And with the recent rally that has happened in markets, I think generally in the first half, these stocks tend to underperform. In the second half, they pull back really strong, given the visibility that they have on the overall earnings growth that can happen for the full year. So that's what we probably might see in these stocks happening. This is more short term, but I agree with you that most of these stocks have given phenomenal rally in the last 2-3 years. These are high beta plays on the markets. When you turn negative on the markets, you cannot be holding these stocks. But I feel that Indian markets, particularly mid and small cap, continue to rally. And there could be some pullback on large caps with what is happening in China and all. We can discuss about it later. But I think we play in this, one of the idea, which is exchange. Exchanges is a long-term opportunity. And I think the kind of profitability exchanges can throw in the long term and the kind of conversion they do on every incremental revenue in terms of margin, it looks pretty attractive as a business. And today there is only one listed exchange company. So that we are positive from a long-term perspective. While the other market players, you can play them as an high beta, as a play on the market, but that's more 1 year view. And you need to review your positions end of every 6 months to see whether you're on the right track.
Okay. Wanted to understand your take. There are sectors like energy transition, NBFCs, and consumer discretionary that you like. We got that update coming in on the RBI talking about gold financiers, some of the issues that they have there. What from the NBFC space do you like more? And the energy transition theme, there are a lot of facets to that. Which one is that you are bullish on?
Yeah, thank you. First, on NBFC side, I think we have always been bullish on NBFC from a structural play. Retail credit in India is still underpenetrated, and there is a long way to go. And there are sectors like affordable housing, used vehicle, and small ticket labs. These are areas where smaller NBFCs are growing, and they're doing a phenomenal job. There are 2-3 stocks that we are invested in. They are seeing a growth upwards of 30% plus. If you look at during COVID, their NPA numbers are also been very benign and very comfortable. And if you can select some of these companies and the founders who are running the show in a much stable manner and also playing this growth opportunity, I think there are a lot of money to be made in those areas. We are not generally very positive on gold as well as salaried housing loans within the NBFCs, primarily because these are areas where banks are very active. And when banks are very active, I think you are left with the most risky segment of the customers. And also your pricing ability is also pretty, it will be constrained given the competition from banks. So given these reasons, we have been not very active on the gold side as well as on the housing loan, particularly on the salaried side. But we like affordable housing, used vehicle, and small ticket lab, MSME lending, these kind of areas. Where I still feel banks are not very active, and it requires a lot of offline presence, which protects them from even the fintechs. So these are the spaces that we are interested in. On the energy transition space, it's a pretty interesting thing that is happening, not just in India, even globally. If you look at India, India's energy demand is growing, and simultaneously we want to meet our climate change targets as well. But always it has been unaffordable. And now, given the battery prices where they are, the lithium-ion battery prices where they are, and even the solar modules prices where they are, you can actually try to reach this climate targets and also meet energy demand at a very affordable level without any government subsidy. And this is definitely a structural trend. And given what the commentary from technology experts in globally, the prices are further likely to go down. So you can actually add a lot of these new energy technologies and be a large part of the energy mix in India. That's a story that can play over the next 5 to 10 years, I think. Within that, we like companies which are electric vehicle battery manufacturing, chemical manufacturing. We also like companies which are, see, one more thing that is happening is government is protecting the domestic manufacturing in these areas. If you let it open, I think Chinese can literally kill the space. But given the government protection for domestic manufacturing and these policies being consistent, there is a reasonable amount of money to be made in these areas. So we are positive on one, the solar being an active part of the power sector energy mix, and on the mobility side, electric vehicle penetration growing up in India in a significant manner. You can play them either on the either the developer in the power side or the OEMs in the auto side. But more so, we find value in the second leg, an auto ank, which is more focused on the electric vehicle component supply. Also on the power side, equipment suppliers in this space, they look much more attractive, and they generally perform well in the early part of the cycle. So that's where our focus is.
You know, we were chatting with Bajaj Auto earlier, and he said that their green energy portfolio, which is EV, two-wheelers, three-wheelers, CNG, etc., now constitutes 40% of their domestic sales. So that's seen a big jump. Just a quick word. In the last conversation, you said that you added on a metal play. I think it was an aluminium play, which was a tactical move. Now, that's played out really well, given the stimulus from China, the rally that we've seen in metal stock. So running out of time, what happens to that tactical play on, a company like, say, Hindalco? Do you ride it, or it's time to book profits?
No, I think there is one more leg to play here. I think given what is happening in China, if you are going to be a large cap player in India, you will be worried about the recent performers, particularly the defensive sectors like FMCG and healthcare, where you will move the money. You will have to move the money where the beneficiaries from China's uptick that can happen. So metals likely to be a favorable position there. So that's something can have one more leg of move is what we feel.
Okay, all right. So that will be an interesting theme to watch out for. Thank you so much for joining in today with all your thoughts and the outlook on the markets as well. Before we move on, let's talk about some good news for our viewers. India's business news leaders now click away. Introducing CNBC TV 18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC TV 18 app now from the Apple Store or Google Play Store.